trader friends, welcome. It is Wednesday, the 20th of August, and we have the wonderful Luke Moore with us on the show. How are you, Luke?
Yeah, good. Thank you. Very good. Thank you for having me live and direct from the trading floor today. Although seemingly the marketing team don't get in earlier than we do. So yeah, very quiet IG dealing floor so far this morning.
But
Hopefully
I
it
can
livens
tell
up a
you
little
that
bit.
the client desk are in super early because I could hear the dulcet tones of Sam Peach and some of the others earlier this morning.
Yeah,
Are they in front of
I've had
you?
to. They're all here, so if they're all listening, they can kind of give us a
Have you
shout out on the chat. But I
have
had
you
to
gagged
flip.
them up because I
I
could
had to,
hear them
I had to,
earlier?
I had to flip from my headphones to kind of come onto my work headphones because we have to cut out the noise. We have to cut them out so that we don't hear them. How are you, Ange? How's your morning?
I am very good indeed. Good to have you on. My goodness, what an evening we had overnight. Tech stocks, especially the mega caps, continue to fall. I was up late last night. What were you up to?
I was not up that late last night. I've got to be honest. I was cooking last night, so I was trying to take my mind off it. Look, what did we do yesterday? The Nasdaq. Let's talk about the Nasdaq. If we get straight into it, the worst day in 4 months. We're back to kind of seeing. Well, I mean, we've come back to. I think it was Nvidia's worst day only since the start of August, though. So we need to kind of
It's
take
down
this with
some
a little bit of a pinch
3.5%.
of salt. Yeah, take it with a little bit of a pinch of salt, though. The interesting thing was there was no real catalysts, though. Really, we were looking to try and find the reason as to why everything sold off. And I think I saw a note from Goldman Sachs saying that they saw that the market was leaking lower, concentrated in the tech book, but it didn't feed on elsewhere. For example, the Dow ended up, I think, on the day. The S&P was a small down, but the Nasdaq was down 1.5%. So yeah, there's probably a lot to break down. This morning we've had the inflation figures come out of the UK, so there's a few things to talk about. So why don't we have a little look and see what's coming up on the show before we dive into it?
Yeah, let's do it. Right, here we are coming up, and we've got myself with Luke all the way until the opening bell. We'll tell you what's moving, and then we'll also have a bit of fast markets to tell you what else will be tradable later today. Got charting crypto a bit earlier with Axel Rudolph, who is back fresh from his holiday, and Rich McDonald and William Nutting. This is a replay of the Expert Edge that was done last week. For those of you that didn't catch it, William Nutting, very, very knowledgeable, talking about all things tech, but also why you should take a second look at investing in Crocs. And then we end the show with myself on opening bell. Luke, if you can, do join me for all sessions because it's been an exciting one.
Did you say?
He's a busy man, I know, but I'm just still going to throw my rod. I'm still going to try and.
You're going to try and hook me back in.
Yeah.
Did you say Crocs then? Did you say we're going to look
at
at Crocs?
No, it was William Nutting. It's William Nutting that in the rebroadcast, if you want to see why he thinks one should get back into Crocs or get back to investing in Crocs, you should watch that program because he's got quite an interesting theory.
Do you partake in Crocs?
No, I do not. I'm not a Crocs person. No, I like my feet very firmly tied in with shoelaces. Are you a Crocs person?
I'm absolutely not, but friend of mine who's currently finishing her maternity leave, Sarah, who's one of my colleagues, I went and saw her last week, I think week before, she invited me around hers for a barbecue, which was great, and she was wearing Crocs. And she said, look, as a new mother, when she's got her baby kind of in arm trying to get things done, it's so much easier to slide them on. And I was like, that's the first decent argument I've heard for someone to wear Crocs, at least.
Yeah. Look, so, I mean, there are loads of reasons, right? Not just Sarah, that's a really good point. Call out to Sarah and baby there, but also NHS workers who, it's easy to sanitize, right? Those Crocs.
Mm-hmm. I guess you can do, yeah. Or people nipping out to the garden is what my mother uses them for. So
yeah.
Maybe
there you go. Right, let's have a look at some overnight action.
Welcome back to Overnight Action on this lovely, slightly overcast Wednesday, the 20th of August. And it was cloudy out there in the markets yesterday, as we started to talk about. So NASDAQ down 1.5%, the second worst day in 4 months, I think it was, puts us back to, in terms of moves, back to where we were in the middle of April. And we were trying to figure out what it was. So it was Goldman Sachs that noted that it seems that it was specific into the tech space.
Yeah.
And what was interesting is the volatility index didn't really move. So when you look at the VIX itself, you typically see the VIX move higher when shares sell off. You would expect so. But then you start to think about what the VIX actually does, and it's looking specifically at the S&P 500. So there we go. If we look at the chart on the on the VIX there, it did move higher, but not particularly, right?
Yeah.
It's not an aggressive move. In fact, you'd still say this is in a downtrend. We've probably hit some resistance there, but it doesn't feel like a broad-based panic sell-off because the S&P 500 didn't sell off, and the VIX tracks markets in the S&P 500. So
in
yeah,
fact, six of the S&P 500 sectors rose. We've got like real estate leading the pack. That was up 1.8%. This is thanks to the better than expected housing data. This is the reason why I was up late yesterday. I was also checking on my Green Lane renewables. I'll tell you about that, trader friends, a bit later. Especially Andrew McKilvey, but also, this was something that was quite unexpected because I was there looking like you to see whether this is broad-based or not. We did see comms, communications, and tech losing ground around 1%, 1.2%. The big names. Just going to show you my screen to show what I was looking at last night. This is just a rough list here. Tesla down 2.5%. But across the board, also weakness with some of the Bitcoin related, not Bitcoin, rather crypto related names, and Palantir down a whopping 11.8%. Those of you still with your shorts looking out across, I know quite a few of you have got shorts on Palantir there. If you stuck to that, well done you. Elsewhere, taking a look at some other tech names as well. Let's just take a look at US chip stocks because, as you said earlier, Luke, NVIDIA down almost 4% there, and advanced micro devices down 6.7% as well. So it was clearly tech feeling the brunt of the selling pressure yesterday.
Yeah, completely. I think there was one interesting thing that we saw earlier in the week that might be worth calling out. There was an MIT paper. So a paper from MIT, which, what does MIT stand for? Massachusetts, is it Massachusetts? Anyway, one of the big universities, MIT, they put out a paper saying that they believe that in the research they've done, 95% of firms currently using generative AI are not making any additional money of it.
Wow.
Which was pretty damning. Now, this came out on Monday.
Damning.
It came out on Monday. So I don't think it's necessarily cause and effect, but it is worth calling out that if you're starting to get research done into how companies are using this, and it's those research, or that research is coming out to say that they're not really achieving anything, then it's potentially just a little bit of a popping of that AI bubble. Now, I don't want to call that because I'm not one to bet against the US consumer, the US retail investor, the way that these markets can trade. But it is worth noting, it also rhymes with what Sam Altman said the other day when he was saying, we are potentially at risk of an AI bubble. So, yeah, there's a few things there to keep an eye on, I would say. It'll be interesting to see how we shuffle out today.
Lots of trader friends chiming in. Neil saying AI value being questioned. That's what we're talking about here. Are we starting to see, like Luke was saying, not calling this a bubble or bubble bursting or being pricked? Just what if this is the point? What if this is the point when valuations are starting to be questioned? Where is the payback? We talk about this month in, month out, right? At some point, all this spending is going to be questioned, and investors are going to want to see numbers that
Yeah.
prove that AI is paying off.
Yeah, there was another thing to call out yesterday as well, is I'm just going to share my screen here. Yesterday afternoon, just before this all started to come out, is we got the Atlanta Fed. Now, we've spoken about this on the show before. So what the Atlanta Fed specifically do is they keep a track of where they believe GDP is right now. So looking at much fast data points, they try to give an estimate of where GDP is now ahead of, as you can see, the consensus. Now, the blue chip consensus is where governments are currently saying that GDP is, and where the kind of investment banks are. And Atlanta typically looks at GDP now and it's higher. And so this is kind of seen as a forward-leading view of where GDP could be. And you'll see that yesterday it came down. So previously, the week before, it was 2.5%. Last week, it was 2.3%. Now, this came out at about, I want to say about 1:30, 2 o'clock yesterday. So it times quite nicely with when this momentum shift started to kick in. So that is also worth calling out, that it could have been one of the catalysts. But we saw this back in the beginning of August when we saw this huge downgrade. And as you can see, there's a very sharp upgrade shortly afterwards. So we'll look to see whether this is a turning of the trend in GDP growth. Does this mean that tariffs are kicking in? Does this mean that we're starting to see the consumer start to suffer? Does this mean that we're kind of really starting to see that slowdown come into effect? Or is this just a single data point? It's worth keeping an eye on.
Yeah. Also, what is key is this comes in a very important week. Not only have we got all that coming out and a huge raft of numbers from the big consumer US names, we've also got Jackson Hole on Friday, right? Home Depot, I was watching this yesterday, rising some 3%. This is even though it missed its quarterly results estimates. Lowe's also a gain there. This is key because earnings from Lowe's and these huge names, Walmart, Target, are now really in focus. At the moment, everyone's waiting to see whether or not the American consumer is starting to buckle. But from what we've seen so far, Luke, this year, they've been really resilient so far, right? I mean, it's incredible. Each time we think they might stumble, they keep giving. And I showed Scotty Ben some graphs yesterday and some data points showing that actually the higher income American consumer still has quite a lot of padding, still has a lot of buffer in the way of savings, and they haven't even patched in to their borrowing properly just yet to spend. So this might go on for a bit longer, or maybe this week we see those numbers showing that Joe Blogs on the American street starting to feel the pain.
Well, that's certainly going to be the focus of these retail consumer stocks, which I believe we have coming up, right? We have Walmart and was it Kohl's as well coming up soon? So they're going to be to see, what is Target as well? Yeah, where does the forecast? Where do they put their outlook? Ignore what the economists are saying for a second, but where do the companies that know exactly how the consumers behave, what are they saying, and where do their margins get compressed because of these tariffs? That is interesting to look at. Look, the biggest thing we need to talk about next, before we get to companies that have reported earnings, is UK CPI.
Yes, I was going to say you haven't been buying enough. You and Rich haven't been buying enough trainers, but you've been flying a bit too much.
Clearly. I don't think actually. I've been driving a little bit more recently. Let me just chuck this up on my screen here, guys, if you could. Are we there? Yep. Nope, we're on the wrong thing. Oh, hang on a second. It would help if I actually shared my screen. Let me do this. And
here we are.
Are we there? Yes, here we go.
Yes.
So UK inflation has picked up. Not good at all. Hotter than expected. The market was looking for a reading of 3.7 in the 12 months to July, and it came in hotter than that. 3.8%. Not good. Both the core and the headline figure picked up in July. Not quite sure what I'm being. I did buy some protein powder yesterday on this.
Yeah, I wonder. I was wondering about that.
Advertised.
Yeah. That muscly male, almost like Tai Chi. Is that what you do at the weekend? Is that what you do at the weekend, Luke? Do you do Tai Chi or
Uh,
Jiu-Jitsu or something?
Clearly, I spend what 5 minutes trying to buy some protein powder because I just ran out yesterday, and this is what it does to me. Unbelievable. Anyway, let's look at this lovely but let's look at this lovely selection of fruit and veg. Yeah, look, it's not considered good. We've seen cable this morning, and last time I checked, we're back trying to retake that 135 figure. Does this mean that we're now going to see less of a chance of a rate cut? Now, interestingly, if we take a look at what I want to do is I want to bring up a different screen. I'm just going to stop sharing this for just 2 seconds while I get the right screen.
I mean,
Okay.
the interesting thing about this whole figure is that it was really boosted by
Right.
transport costs, particularly airfares, all those, flights that Richie Rich has been making, and producer Phil as well. His 3 beach summer per year holidays, and some other 3 beaches, darling, 3 beaches. You heard me right. Additional
Can we
support from other
pop this on the screen,
sectors
guys? Just while we're
as
there.
well, the influence from housing and household, actually that all moderated somewhat. It was really transport costs.
Yeah,
um
it's interesting. So what you see up here is transport, restaurants and hotels and food have been the
mm,
biggest contributors to this uptick, and the
mhm,
biggest detractors, those that are pulling away, is what we want, right? We want
mm,
housing costs to come down. We want owners occupying housing costs. This is happening in real time as a result of them cutting rates. So when you cut rates, people are able to refinance their mortgage. Hopefully that then feeds into the rental market, and you can see that down here. So the housing costs are down 0.13 and 0.15% as a contribution to the CPH. That is interesting. But transport, and I dug a little bit into this to find out what was going on. It turns out that there was a kind of issues in the transport sector. Demand for heavy goods vehicles, kind of Arctic lorries and 7.5 ton capacity vehicles rose significantly in July, while their supply fell. So, for example, Arctic demand increased by about 5%, but supply dropped by 8.4%. So there was a squeeze on the ability to find drivers, to find trucks, and that is what has given us a problem here. Actually, my father, his business is in logistics and in travel, and knows that a lot of his drivers do disappear for holidays, and so the peak of summer is always a tricky time to manage. They also want to call out in this particular data point TfL. So those
mhm.
that live in London, TfL rose their fares last month. There was an average increase of 4.6% on TfL fares, including travel cards, daily, weekly caps, which are set in reference to the RPI with a +1%. So that's come in slightly higher. So yeah, transport kicking us a little bit. Housing costs positive is my takeaway.
Yeah. Let's take a look at the reaction, trader friends, across the forex markets. Putting up my screen there, we've got some, cable there up for you. The pound looking like it rose against the dollar on that inflation slight jump there. Let's have a look as well. Sterling versus the euro. There you have it. They're also looking, this is the minute chart, trader friends, also looking like a slight jump there. What is increasingly obvious is that, we are seeing a lot more people. I'm waiting for the data to come out to prove the anecdotal evidence as well. The rise in fuel costs as well, coming as more people stay in the UK for their holidays, traveling around the UK rather than flying abroad because of this unseasonably warm, consistent weather. I don't know about you, Luke, but I've been really enjoying the consistent warmth in the UK for the first time this year, enough to make 2 trips to the seaside in the UK to do water sports. Unheard of.
Amazing. Look at you. Yeah, I mean, I've spent most of the summer here. I had a couple of trips. My wife and I made a couple of weekend trips earlier in the summer and late spring. So I try not to travel in the peak times because summer holidays, everywhere's a lot busier, a lot more expensive. So I try not
Not
to.
driving at 4 a.m. You won't get caught
No,
by.
no, it's not for me. Not for me. Look, I think today we're going to be looking at that cable rates. I'm specifically looking at kind of that I think 135 we'll take, and hopefully that stays taken today. But that 136 figure, and then above that 136.81 are the levels that I'm looking at specifically. So we'll see how it all moves.
Right, lucky Luke, lots of people chiming in. Andrew McKilvey saying, Luke, CPI measures inflation for the homeless. If you want to include housing costs, look at RPI. It is now 4.8%. Andrew also saying, Luke, CPI does not include council tax or owner occupiers costs.
Okay.
This is an interesting one. I recently mentioned to a friend who wasn't aware. So I thought everyone was aware of this, but clearly not. If you have an empty place to rent out, you actually have to pay more, not less council tax. Did you know that?
I didn't know that. No.
Yeah. Yeah.
No, I don't have a place to rent out, unfortunately, so I don't know that.
Away from the numbers, say morning team, morning cucumber as well. Maturing, yes, Viking Therapeutics took a big hit yesterday, down 42%. Thank you so much, Paul, for pointing that out, because after we had Julian Wheeler-Dealer from Sean Capital on, I did have a look. I'm still researching the company, so I don't have a position, but I will look a little later today, because that 42% drop, to me, maybe if the valuation's right, this could mean time to enter. We'll see. Poppy is saying, listening to the Art of Investing podcast this week for our answer to, is this an AI bubble? Brilliant. For those of you, it's a fantastic podcast. I find that the train journeys are very good in terms of timing to listen to three in a row as well.
Yeah,
right.
Yeah. It's good to get through them.
Yeah. Luke, I was going to ask you, you up for a bit of steak?
Oh, I love a bit of steak.
Yeah. Twitter friends, you're up for a bit of steak?
Are you inviting me out for dinner, Ange? Do we need to,
should we go for dinner with the Sage of Omaha this Friday?
What, in Jackson Hole?
So for those of you who have heard of this or haven't heard of this, his favorite steak restaurant in Jackson Hole is called Groat. And it is well known that he also, before he goes there to eat, he likes having a McDonald's, a dirty McDonald's.
And a can of Coke every day, right?
Yeah,
he's a little bit similar to every single day. He's a humble man. Just he's one of us. That's the thing to know, isn't it? He's one of us.
Yeah. And the other interesting thing too is with his steak, he likes a substitution. He likes to substitute the baked potato with hash browns.
Nice.
And he likes sitting apparently in the same place every year. So it won't be hard to spot him. There's a cardboard cutout of him, which is a bit tacky, but it's outside the restaurant.
There you go. Should we do guess the chart, or should we look at some stocks? Let's do that, and then there's a couple of stocks I want to call out. So let's do guess the chart, and then we'll look at what the options are doing. Yeah. Let's do that. It's a US
stock. Let's do it.
Wake up, traders, time to start. We're zooming in on lines and art. Candles dancing red and green. Is it crypto?
that? How was that? Wasn't that the
Wow.
best tune ever for Guess the
Wow.
Chart?
We're
Right,
we're
who got
lobbying
it right?
we're lobbying producer Phil. We need to get all these released. We need a big Spotify thing.
We need this in a Trader Friends, special edition, streaming, memorabilia, CD type thing, anything. I love the music. Love the
Yep.
music.
And on the chart, congratulations again to Hamish. CrowdStrike.
Wow.
Oh, Gavin Ackers.
Was it
Sorry,
Gavin?
excuse
I
me.
thought it was
Gavin
Gavin.
Ackers, CRWD. Quite right. CrowdStrike, famous for the blue screen of death last year when everybody was locked out of all their machines. That was it. Yeah, you
Ange
figured out
was
who was
Ange
using.
was stranded at that point in Chicago O'Hare Airport.
Yeah, you figured out who was using who their clients were because everything went down. IG did not. IG did not go down, if you remember rightly. Now, look, we are just a couple of minutes away from the opening bell, so we've got a couple of stocks to call out. The biggest mover I can see in London this morning looks to be Premier African Mining. So they are a small cap, but they're being called up 20% by the market. But so from what I can see in the auction, they're up 34.6%. Now their lithium plant has successfully transitioned from commissioning through to optimization, having achieved scalable concentrate grades of up to 6.2%. So offtake negotiations are underway, and that is seen as very positive from them. What else have we seen?
Heads up, heads up, Trader Friends as well. The Ange filter is starting to trickle through. We've got early indications that Rheinmetall, Hensoldt will be lower, much lower today in Frankfurt trade as well. Alcon also, those of you that trade Alcon shares seen down some 6.7% there. Gerberit seen down more than 2%. So looking like quite a risk-off day for those sectors. Checking in. Sorry, go on.
I was going to say elsewhere in the UK, in the mid-cap world, Angle, AGL, the ticker there, they're called up 4%. They've had a collaboration with Myriad Genetics, and they're going to assess the use of a DNA technology for parsotics, which is one of their diagnostic testing bases. So they're being called up 4 to 5%. That's positive there. I think we also need to look at Convatec in one of the larger caps. They are starting a $300 million share buyback today. So CTEC, they're being called up 2.3% so far this morning.
Yeah. So I've got my chart all ready. We are counting down now to the open in a time when everyone's asking, is the tech dam creaking? Is it creaking after those moves overnight where we saw NVIDIA down more than 3%? We saw the AI index down 4%. Here we go. You're pressing the bell for me, Luke.
Let's go.
Let's
Okay,
go. Right. We've got,
counts.
lots of red numbers there. Overall down for the US. But let's take a look at the FTSE. FTSE is just flat there. FTSE, let's zoom in on some of the stocks there. Luke, take us through the losers list first.
So at the bottom of the pile there, you've got Rolls-Royce. I'm trying to see if I can see your screen. Down 1.2%. Ashtead Group down 1.1%. Melrose down 0.97%. What you're seeing there is a continuation of the moves we saw yesterday. You know, if we're seeing peace over in Ukraine and with Russia, then some of that premium is going to get pulled out of these European defense names. That'll be why your Rheinmetall's down as well. So Melrose is not surprising to me at all.
Yeah.
What about at the top of the pops? Convatec open up 3% on the news of that buyback, so positive from them. This does look to be a bit of a defensive rotation kind of day, though. In money moving into utilities, United Utilities up 1%, Unilever up 0.7%, British American Tobacco typically seen as a defensive up 0.6%. So we're starting to potentially see the beginnings of a rotation feeding through from yesterday. My favorite Scottish Mortgage, the tech play that's based in London, they're down 1.6%. They're at the bottom of the performance. Again, in line with this expectation of a rotation.
Yeah, and we're also, starting to see this in the US as well, though it's still early days yet. But as Luke said, across Europe, we are starting to see some of the, unloved names in the last few months starting to perk up here. Let's have a look and cross over to Germany now, because the Germans, if I'm right with the early calls earlier on, then we are going to see a bit of pain in the European related defense names as well. Top of the losers board there, Siemens is down 1.3%. We've also got Infineon down the same amount. Airbus down 0.75%. Volkswagen, some of the car names as well are lower at the moment. Porsche down 0.5% there. Any of those names pop out to you, Luke?
The Heidelberg Cement at the top there was something that I could see there. It's been bid up again on this infrastructure kind of European defence play, so that's not a surprise. Interesting to see all the autos down collectively. I haven't seen any coverage on the auto sector.
Maybe
Interesting to
this
see if we
is
can
like
see
on.
more.
There were some articles early in the week saying that some of the automakers concerned that, as Trump is trying to negotiate this deal with Zelensky, that he might use the more tariffs as a lever to get the Europeans to play ball. Right, let's cross over to the gainers, and there are not many gainers today, has to be said. Look, very few names up there. Your Henkels up 0.6%, as I mentioned. Henkel is a very good defensive name, probably the most unknown name in the Germany 40. It does lots of super duper adhesives that make sure that your iPhone, your Samsung, even your aircraft stays together, but it's super light. And we've got Deutsche Telekom, Deutsche Börse also up slightly higher, but it's more so a down day.
Yeah,
Heading
the DAX is weak there, down 190 points, trading 242.45. That's 0.7, the weakest across Europe. So keep an eye on the DAX. I think when it gets momentum, it can move quickly. So just keep an eye on that. Trading the low of the day at the open, never a good look.
Yeah. What is it going up? Like taking the stairs, coming down on the lift?
Yeah, markets take the stairs up and the lift down. Yeah, that's it.
Right.
Just to call out those ones that we spoke about before the market. Convatec now up 3.3, trading 239. Angle was up higher, but now pulled back just up 4%. And then we also took a look at Premier African Mining, didn't we? Wow, up 83% in the small cap runners space. So that is congratulations to anyone holding a position in Prem. Up 83%. You love to see it.
Yeah, and just checking on some of the ones that I mentioned earlier as well. Rheinmetall there, as I told you, indicated lower. It's down 3.8% and heading lower as we speak. Let's take a look at rank as well. For those of you still in the space, as I said, make sure you have your logical hat on with Trump, strong arming potentially the European leaders and Zelensky, reportedly strong arming them into some sort of deal. It's like he's moving that cash over to US defense makers. Rank there down 3%. And what was the other one that I mentioned earlier? Gerberit. Very unknown name, but yes, down 4% there. A lot of people have this in their pension funds, but don't even know it. Luke, shall we take a look at France?
You can take a look at France if you want to take me to France. And take me to France.
Here we are. Losers list. Take us through that.
Where are we? If you could stop scrolling, that'd be fantastic so I can see.
Yep. Micro.
ST Micro, Stellantis following that Euro kind of the automotives offered there that we can see there. Airbus also down 1% or so. Hermes and LVMH, the luxuries, both not getting any love, and Kering down there too as well, but not quite taking the hit as bad as you would expect. Why is that, Ange? Why are we seeing weakness in the luxury sector, would you say?
Well, I think it's because China still hasn't, come through with lots and lots of bazooka-like stimulus. And don't forget, a lot of the luxury goods makers are reliant on the Chinese market when the US market is not as buoyant.
Mm.
So Chinese tourists as well, that hasn't come back to pre-COVID levels around the world. And no surprise there, there's not a huge amount of travel to the United States. And so when Chinese tourists travel, they tend to buy luxury goods, and that is not happening as much. But it's a good time if those of you want to buy the dip to buy Hermes. Hermes is a very high-end luxury name that tends to be a good sort of staple in your luxury sort of selection, if you like. When you look at further down the list, Kering there down 0.8% as well. That sort of tends to be for luxury analysts. Kering is sort of like middle ground. Hermes is top of the list. Let's have a look at the winners to see if there are any. Not very many winners there, has to be said. It's more down day.
Yeah, I think it's that we're seeing Europe play the rotation game from what I can see. One thing I didn't call out was upgrades and downgrades that we saw just before the market. This might explain the strength that we're seeing in United Utilities, because they have been raised to an overweight at Barclays with a price target of £15.35. So that's good for them. Aberdeen, they've got their vals back and they've also got a price target back. They got raised to a sector perform. So from a neutral to a sector perform, price target at £1.95. And then a couple of tips. The Times have tipped B&M European Value Retail as to a hold. And then the Telegraph have tipped Weir Group to a buy. So that is what we're seeing. Yeah, and I've just seen a couple of alerts go off on my screen here. Rolls-Royce down 1.5%, BAE Systems down 1.4%, Melrose down 1.6%. That European safety, well, I suppose the peace trade is sell the defensive companies which have been bid for. Should we have a little look at Rolls-Royce? Is it on the chart? Should we have a look?
Here we are. Let's have a look at the 2-minute chart there.
Yep.
Here we are. You can see the move right there. Kate Murphy, hope you're out of that. Lots of trader friends as well chiming in. Costain down 15%. Thank you very much, Andrew. This is despite the fact they raised their divvy. Away from numbers, any thoughts on Chill Brands? Not what I'm au fait with. Luke, you know Chill Brands at all?
Yeah, I've got a lot of people in it actually. They came back to the market at where are they? They're trading 130. Chill Brands, for those that don't know the story, they had a problem effectively in the company. They had an American division and a UK division, and the directors were American. They supposedly stole the IP, stole the website, and locked everybody out, and then took a load of money out of the company. And so we had to suspend. The stock got suspended in London whilst they sorted this all out. They couldn't report their numbers. They had to change the whole business. It was a bit of a double whammy though, because Chill Brands, one of their big products was disposable vapes and CBD vapes. We know that is disposable vapes are being banned by the UK government, and so it took a massive haircut there. They've come back to the market. They seem to have spun into a wellness brand. So you look at their website now, they are a wellness brand. What do I think of the stock? I think it's going to take a while to shake off the moniker of everything that they've had. How have they traded since they've come back, Andrew? Have you got the chart up there?
Yeah, it's flat at the moment. I have to say, this is Chill Brands. Showing you the chart here. This is the 1-hour chart there. And also, I was just checking in on the market cap. This is why I've not traded this before, invested in this before. £7 million. Really,
it's a real tiddler, but it's a stock that people love. I mean, it's been heavily traded here at IG for a while now. It was Zoetic before that, so it changed its name a while back. Look, it's a real tiddler. It's not very liquid. It's only traded 8,500 shares today. So what's that? 8,500 shares at a penny, 800 quid's worth of stock. So very, very little. very, very little at all. In fact, it's not even that, is it? It's
Let's have a quick look across to the commodities space. We've had oil up almost 1% there, coming up after being quite weak yesterday. Brent, that's WTI. Brent is up 0.7%. Natural gas easing off a bit there. Also taking a look at metals. Gold is edging slightly higher, but not by much. Perhaps some of the rotation has actually meant that gold has eat a bit of a gain there. It has to be said that this gold move might be a bit muted as well ahead of that Jackson Hole symposium taking place this Friday. Silver down 6%.
The other way you can think about that gold trade is dollar strength. Okay, and the dollar index is
that's what moved it to a 3-week low, right?
Exactly. Yeah, the dollar index is on a bit of a tear. It's been performing really strongly in the last couple of days, and that's what's kept the gold price underpinned. Because I would have thought yesterday, if what we saw yesterday was a broad-based, it's time to deleverage, get out because of reasons ABC, I would have expected gold to have been stronger, but it wasn't. I would have expected to see that strength come in as a defensive play, and we didn't, which makes me think it's more of a sector-based rotation day out of high momentum tech into into slightly more safer areas of the market. Take your profits on the tech. It's at all-time highs. Happy days. I don't necessarily buy into the story that the AI story is going to pop all because of one day's move. I think we need to relax a little bit, right? We're still seeing unbelievable amounts of OPEX, unbelievable amounts of investment. The energy story is there. The growth story is there. It's all there. We've seen one day's worth of price action, and everyone's saying that the bubble's popped. Let's just calm down a little second and reassess.
Yeah, I think this is just probably a check-in point, just one day isn't enough to call a trend. Elsewhere, right. Silver also coming off slightly there. Platinum and palladium though coming back after a weaker session. Taking a look at high grade copper as well, that's up 0.5%. What will be interesting is also not just what comes out Jackson Hole, but also we've got Fed minutes, I believe, that are coming out later in the day. I think I'm right in saying that, right, Luke? Fed minutes due later.
Fed minutes today. Let me just take a look for you. One second.
So. If it is later today.
FOMC minutes at 7 o'clock.
That's right. I feel it in my Ange gut. Then we could get the Ange gut. It always happens during dinner time for me. Jensen Huang presentation, dinner time. Fed minutes, dinner time.
I don't need to know about your post-dinner exercises. Thank you very much. Don't think anybody needs to know that.
It's definitely not jujitsu or
yeah, whatever.
Wash my eyes after this morning. Watch out for that. That is later this evening. Otherwise, it's looking like potentially quite a risk-off day. So put those oven gloves on or mitts on when trading the markets, but also keep an eye out for all sessions and the cash open, because for those of you wanting to or waiting to buy the dip, this could be the session.
Correct. See you in the what we've got next. We've got Axel coming up next with charting crypto. So we'll hand over to someone who's actually an expert to teach you about what's happening in the crypto space, because the sell-off has been there as well. Everything has been coming off of its high. So stay tuned, and you'll get the expert eye from Mr. Axel Rudolph.
In the last video, we talked about earnings per share, or EPS, using pizza slices to explain how much of a company's earnings you, as a shareholder, would get for each slice or share that you own. But today, we're taking it one step further, and we're using EPS to calculate the PE ratio. And this will help you understand what a share price actually represents. The PE ratio stands for price to earnings ratio, and it's one of the most widely used tools to measure a company's valuation. But what do I mean by that? Valuation is essentially the price you pay for something compared to what you get in return. Is it worth it? Whether you're buying a car or a house or shares in a company, valuation helps you decide if the price you are paying is fair. Now, in the stock market, what you're getting
Hello and welcome to Charting Crypto. Let's get straight into it with Bitcoin. And for those of you who read my articles over the last week on the IG website or received the emails that we send out to premium clients, you would have noticed that I called the sell-off in Bitcoin and other cryptocurrencies quite well. And the reason for that is if you look at Bitcoin last week when we were doing this session here, we were trading at all-time highs very close to $125,000. What then followed from a technical perspective was very, very interesting because first of all, as you can see here, we were trading slightly and for the first time actually closed above this dotted line here, which is the 161.8 Fibonacci extension going back to the very beginning of Bitcoin. That was our upside target. And you can see we hit that back in mid-July, then came off again, and we did so again last week. But we didn't see any follow through to the upside. And what we instead saw is this big red candle here. And this is called a bearish engulfing candle because basically what it does, if you look at the body, but the difference between the open and the close, this red bit here, that engulfs the previous green bit. So if you were to move it to the left, you would completely cover this green area here. And this is called a bearish engulfing day in this case because it's a daily chart. And that is a bearish signal. And if it happens around key resistance, as was the case here with the 161.8 Fibonacci extension, it can, and quite often does, lead to a reversal. Now, it took a while for that to happen because as you can see here for 3 days then, on Friday and over the weekend, we just sort of traded sideways. But then on Monday, we fell and slid through our April to August uptrend line. And what was our downside target then? Well, I mentioned this area here, the difference between the high seen in May and the low seen in early August. And this is exactly what we hit earlier today. So we're holding at the support area at the moment. So the big question now is whether this is a buying opportunity, because after all, Bitcoin has come off 9% so far from its all-time record high last week, or whether this could lead into a more significant downturn. Now, I'll give you both sides of the argument. And basically, from a technical perspective, as I said, as long as this support area that we're testing right now holds, and as I say, it goes down to the 3rd of August low at $111,982. As long as we stay above there on a daily chart closing basis, for me, we're just trading in a sideways trading range. Some people might think, well, actually, we need to make that support area slightly wider because Bitcoin, after all, went up about 66% from its April low. So, maybe it might overshoot slightly to the downside, coming off a bit more than 9%. Well, in that case, if you widen your support area and make it a wider one, you would also incorporate this high from the 9th of July and this high from the 3rd of July, from the 9th of June, sorry, and the 3rd of July. So you can see these two highs here, which make up that support area. So basically, we're taking our support down to about 108,617. So as long as we stay above that level on a daily chart closing basis, everything we do, we have to look at the close, even though Bitcoin trades in 24-hour markets. Well, as long as we stay above there, for me, we're still in a sideways trading range, short term and long term still in an uptrend. But, and this is the big but, can you see at this high we made, the all-time high last week was made above the high we made back in July. And what we then saw is, if you go to the bottom of my screen here, the relative strength index making a lower high. So this higher high here on the price chart was accompanied by a lower high on the relative strength index. Now this is called negative divergence. And when that happens, in about 65 to 70% of cases, you do get a reversal, at least in the short term. Now you might say this is already it, but sometimes it leads to a major reversal, in which case this isn't it yet. So what would be the trigger? As I said, if we fall through the high seen on the 3rd of July, this $108,617 mark for Bitcoin, if we fall through there on the daily chart closing basis, what we're then seeing is a trend line break and a fall through the last relative low. Now this for me technically is much more significant, and since we've also taken out the previous support here, it could then mean this decline is much steeper. And what would be the downside target for such a move then? Well, in that case, we could see a pretty quick slide to at least the 2nd of July low here at around 105,159, or these lows here, 12th of May to the 5th of June low, those come in down towards $100,430. And then the last big reaction low here is the June low, around 98,330. And you can see here also this red line, the 200-day simply moving average, coming in this vicinity as well, around 100,483. So basically what I'm saying is, if we were to fall through the support area on the daily chart closing basis, my technical view would change to a bearish one in the short to medium term, and I would expect a move back down again towards the 104 to 98,500 or so area for Bitcoin. So I'm not jumping the gun. I'm not saying this is going to happen. I'm not forecasting something which might not take shape, but what I'm getting ready for is, what if this happens? Then I would do this or that. So let's talk about the what ifs. And if we hold here, as we seem to be doing today, well, it's a buying opportunity to go long. If you're wrong, where are you wrong? Well, if you fall through this support area, as I just mentioned, so you could place your stop loss in case of short-term buying just below this support area, perhaps, because a fall through there would likely lead to further downside. If you are short, which most people probably aren't, then where's your stop loss? Well, the last reaction high is probably the high from Sunday. That was made 118,624. As long as we stay below there, the short-term downside pressure remains in play, and that high is also above the now breached uptrend line, which is now, because of inverse polarity, a resistance line. So I've talked you through both scenarios, the bullish and bearish one here for Bitcoin. Another thing I wanted to mention is how important technical analysis is, because if you go from the daily chart to the monthly chart, can you see here, if you drew a resistance line from the high, so going all the way back to the high seen in December of 2017, and then you connect it up with the high seen in 2021, what happens? If I just move these out of the way, can you see here that this resistance line more or less tied in with the 161.8 Fibonacci extension? And this is where our highs were made on a monthly basis at the moment in July and currently in August. So you can take levels going way back, which can act as resistance in the future. And that's why technical analysts quite a lot of times leave old breach trend lines or support lines on that chart. And it does sometimes look a bit messy. So anyway, enough about Bitcoin. What about Ether? Well, Ether, if you look at Ether, you can see here that the Ether chart against the US dollar is also testing support. Again, if you look at what happened here, we basically came down And this looks like an ABC correction, so ABC Elliott wave correction. So this might already be it. We might have tested support, and now we might be heading back up again. But why did we hold here? Well, basically, if you go back to the highs we saw back in March 2024 and in December 2024, and then also again at the end of December, that whole area here basically earlier this morning became support. And that support area is slightly wider because what I did also here is I incorporated the highs going back to May of 2024 and also the highs seen here at the end of July of this year. So that is currently the support area. It is at the moment holding. We're bouncing off it, as you can see here. It is potentially just an ABC correction, which is normal. We saw another one here at the end of June and beginning of July. So perhaps this would represent a buying opportunity for Ethereum. Again, where are you wrong? Well, if you fall through that support area here, so basically if we fall below 3,750, let's say dollars, then you're also falling through this support line here, this dotted line. And in that case, the bullish view might be incorrect. And we might actually slide further towards the next lower support line, this one here, that could take us back down again towards $3,700. Or you've got another downside target here, the 24th of July, potentially at $3,500. And then the big important one is the early August low at 3,356, sorry. If we were to fall through here, then the technical picture might become far more negative, and we may then come back all the way to these areas here, this whole area between May and June of this year, and that would take us much lower towards 2,800. But these are only scenarios if we were to fall through that support area on a daily chart closing basis and basically break through there and fall through that. Right, so let's look at XRP, I've been asked. XRP looks slightly different. Here we also had what looks like an ABC correction at the moment. We're holding, but we're trading below the 55-day simple moving average here. And basically, what we're seeing is that we're holding currently above the early August low. For me, that's the line in the sand for a lot of cryptocurrencies. If we were to hold above there, then this is just a correction. As we saw here, we saw an ABC correction back at the end of July, beginning of August. That might then take us higher again, probably only towards the $3.30 area, sort of this area here where we were trading just recently. But that would be the scenario if we were to hold around current levels. If we were to fall through the early August low, well, in that case, can you see here that ties in or is slightly above another support area here, which are all these highs going back to March and also May of this year, and they go back down towards $2.59. That may act as a support area, and perhaps then further down the 200-day simply moving average is 245.60. That basically it would be a bearish scenario in a case of August, of the early August low being fallen through. If not, if we hold there, as I say, the previous uptrend line, now because of inverse polarity, a resistance line, so I should make it a dotted line here, that could be resistance to the upside. What we really want to see is a rise above yesterday's sharp long candle to the downside. So basically a rise above 308.13 would indicate that this corrective move has most likely ended, and that could be heading back up again towards this 332 to 337 area, where the highs since late July have been made here. Now, I've got a question, AAVE, but we don't have it on the platform, so I'm not going to cover it, but I can talk about Solana. Because I've got another question on Solana here. And Solana, the picture is quite similar to XRP. You can see here we had again an ABC correction to the early August low. Since then we rallied and retested the previous high, the July high, but didn't close above there on a daily chart closing basis, and that was a minor warning signal that we might correct. The correction so far looks corrective because it's just an ABC pattern if we were to hold around current levels. And here the support level that has held so far for Solana is made up of this low here, the 25th of July low. That was made around $175.79, and this low here, the 11th of August low, $173.48. You can see this. I mean, I can actually just draw it on here. This support area is currently holding. So what you can see, what I always do is I take previous lows, try to find a cluster of where they come together, and then I create a support or resistance area in that zone, and quite often markets will exactly hold in this area. So here, as long as we hold above that 11th of August low at 173.48, we remain bullish. That might just be a short-term correction, in which case we could then retest the previous highs here going back to 209.88 and go higher still. If we were to fall through that low from the 11th of August on a daily chart closing basis, it would likely mean that we're going to retest this uptrend line going back to April. That currently comes in around $169. And then below there, we've got as potential downside targets. Can you see again here? I'm looking at previous highs and lows to see whether I can find any support area, potential support area. You can see here the 19th of May low ties in with, let me just do that now. This low ties in with this high here, 16th of June, ties in with the high on the 30th of June, ties in with these lows here, 12th of July and 15th of July, and most importantly, the 2nd of August low. So that would be our next big support area in case of a fall through this support area being seen. You can see here also the red line, the 200-day simply moving average, also being found there. So that is the case for Solana in case of a follow through to the downside, changing our currently still neutral to bullish outlook to a technically short-term bearish outlook. So you can see how you can use technical analysis and see here how these levels work out basically if you use technical analysis in your approach to cryptocurrencies. Let me just have a look at Chainlink. Chainlink is one which I haven't looked at yet, and you can see here what we're seeing is that we are still from a monthly basis heading higher. You can see here I will start with the longest time frame that I can look at, and Chainlink has had a very positive month following a positive July. We are currently approaching potential resistance coming in around the January 2022 high, around $28.71. And then above there, we've got this high here from December 2024 at $30.95. So in the short term, what can we see on this chart? Well, on the daily chart, you can see here that we have a series of higher highs and higher lows. So Chainlink is looking much more positive than the other cryptocurrencies we looked at beforehand. I can draw in a support line here. Actually, it is actually already a trend line because we've got 1, 2, 3 touching points. So we can make this a solid one. It's quite a steep one, so I wouldn't be surprised if we were to, even if we were to fall through there, it would still be bullish. The only caveat, technically speaking, that I have is that we do have negative divergence. And as I said earlier on, if you do see that, there is a chance that you might at least short term see a reversal. But why? Well, basically, can you see here this high from July coincided with this high here on the relative strength index, and these highs here from mid-August and from last week, they coincide with lower highs here. This high being lower than that one, and that one being lower than the July high. So we've got what is called negative divergence, triple negative divergence. As the price chart made new highs, the relative strength index is telling you that this uptrend is weakening and potentially we could see a reversal. So Was that already the reversal yesterday? Possible. If we were to fall through yesterday's and today's lows, then we also have this wedge formation here. It is possible that we may very well retest the next support area. So where's that support area? Well, basically, it is all of these lows here. Can you see them? All of these lows here going back to the 11th of August low at 20.85, so $20.85. So that is a potential support area. As long as we hold above there, the trend is still your friend, because you can see we've got higher highs and higher lows, which is the definition of an uptrend. And also we've got a very steep uptrend here. So it's still looking positive as long as we hold above today's low, basically on a daily chart closing basis. Now, that support area, if we were to fall through it, well, the next downside target would be the high seen in July. It's very slightly below that previous support area, $20.28. And then that together with the 28th of July high at $19.56 might act as support. If not, the next lower support area or potential downside target would be this May high here, going back to $17.98. So those would be the downside targets if we were to fall through the downside. But right now, the trend is clearly bullish. The oscillator is warning us that potentially we could see a short-term reversal. So in that case, if you're long and just doing investing on a short-term time frame, perhaps tighten your stops or you take profit stops. If you think that the retracement lower is just going to take it to this support area here, maybe if you've got a longer term position which is long on here, just leave it, because basically from a medium term perspective, as long as we stay above the August low, again, the August low I keep mentioning for all these cryptocurrencies, well, basically that was made at $15.43. As long as we stay above there, the trend is your friend and still pointing higher, and we could head towards these highs I just mentioned on the monthly chart in the days and weeks ahead. And as I said, these highs are the high from January 22 at $28.71, and the next higher one being the $30.95 high going back to December of 2024. Now, since I haven't got any more questions, I think we're going to leave it there. Thank you very much, and I'll see you again next week. Goodbye.
So if you take it this year, it's ultimately obesity. Well, that's kind of, the market caps on those have finally gone on a diet. AI, clearly we can talk about. The only people who don't think AI is a multi-trillion-dollar business is people who use it to answer a pub quiz. It's just a phenomenal and incredible tool.
Welcome back, everybody. So we got Will Nutting on the show. Welcome back, sir.
Morning, Rich.
Now, how's the portfolio been doing this year?
We've had a good, it's been hellishly volatile, I think we were up 19 in the first, we're up 19% for the first 6 weeks of the year. It then went down, I think I went down to down 9, which would have meant that any external investor would have come around and shot me and taken all the money out. And we're now back up 15. So we had a good run. Yeah, you've got it on the.
That's fantastic. Take us through some of those names there, then.
Well, we were going to talk about them. I think Bitcoin top left. To me is just the classic. It's the classic offset to the constant printing of money, to offset the appalling demographics, the huge entitlement, and the debt in the West. So I don't think it's much more complicated than that. I think corporates now. I think Connor Smith was saying this morning that corporates, good stat, 1.8 million of the 21 million Bitcoin is now owned by corporates. I think that number is just going to go higher and higher and higher, because if you own sterling or you own dollars on your balance sheet as a corporate, you're ultimately owning an asset. You're ultimately owning something that's being inflated away, and the purchasing power of those dollars is going down. So if you talk to the board of any of those companies, are they ultimately performing a fiduciary responsibility to their shareholders? And I would argue not. No. So that conversation that Microsoft were having at a board level 6-9 months ago, I suspect that conversation happens in 6 or 9 months again, and I think the decision might be a different decision.
Yeah, definitely.
So I think that's hugely exciting. And then we got to the special situation stuff like So the nuclear uranium story, BWXT, great implementer. They put all the nuclear, their nuclear reactors onto U.S. naval ships.
Wow.
Great implementer, fantastic, great sort of mid-cap story. Lightbridge is a here story and a future story for uranium. They in fact report the numbers tonight, and I would imagine it'll be a very, very positive call. But they ultimately have an existing nuclear fuel technology that makes existing nuclear reactors significantly more effective. The fuel burns, or the fuel operates at a much lower level. They're also hugely involved in future fuel for nuclear reactors. So Lightbridge has been a key story for us. UEC, uranium miner. You're clearly having to take a view on where uranium utilization and mining is going. Leonardo is a European stock.
That's the defense name, isn't it?
That's a defense name. So if you take it this year, it's ultimately obesity. Well, that's kind of the market caps on those have finally gone on a diet. AI, clearly we can talk about. The only people who don't think AI is a multi-trillion-dollar business is people who use it to answer a pub quiz. It's just a phenomenal and incredible tool. I have no idea what the valuation of these things should be. And then defense, and my worry is that if there is some kind of come to Jesus moment at the end of this week in Anchorage with Trump and Putin, and the reality of what they need to do comes to mind, then it would be interesting to see how defense stocks actually react. Because I think longer term, there's no doubt about it, European companies want to spend. You heard JD Vance yesterday, as his enormous motorcade was apparently streaking its way through Oxfordshire, saying that ultimately the US doesn't want to spend any more money on Ukraine, but if foreign governments and foreign countries want to buy US defense equipment from US defense contractors, they'll be incredibly happy to sell it. So that's very noble of Vice President Vance.
Now, going back to your point on AI, do you think that, or when do you think the time to start buying ordinary companies for their margin benefit from implementing AI is? And how long do you think the actual, the hard...
So I think this is really interesting. I was writing a piece this morning, and I said that it's within 18 months, most people think your bin will empty itself, the cat will speak Mandarin, and no one will ever have to work again except to post on LinkedIn. But, someone's going to have to lay the tarmac in the rain. The nurse, I don't think AI is going to be changing your bedpan.
Nope.
The man with the digger, so if a robot can't do it, a human has to do it. So I'm kind of looking at staffing companies, I'm looking at equipment rental companies, industrial kit hire, industrial contractors. So I think the industrial economy should benefit alongside this. It's more of a stock market phenomenon, which is that, if you build it, they will come.
Yeah.
You've just got the amount of money that's flooding into index funds. It's just so much easier to own. And I think maybe even the bigger point is that if you look at the best thematics in the market at the moment, and you're an investor and you stand back, I think the other challenge is that, and I think I've written this quite a lot recently, is that you went back 18 months, 7 or 8 of those thematics, if you look for the best way to play those are US companies on the whole. And that's why I've always loved US equities. I've done it for 30 years, US companies on the whole. I think you're just beginning to see that now maybe become 8 goes to 6. And if 8 goes to 6, the asset allocation implications for that, and you were to get some kind of a resolution to the Ukraine issue, and you were to get some kind of, cessation of hugely expensive power in Europe, then I think that does something to the asset allocation side for European equities, and maybe. So I don't know whether that...
So it's only just begun?
It's only just begun.
Right.
And it takes a long time.
Yeah.
The Ontario Teachers Pension Fund does not move in a hurry. And, I think that's the positive argument for digital assets. It's a positive argument for tokenization. But I think the thematic that I think is most interesting here is I think you're going to see the Mag 7 give way to what I call the Block 7 over the next 4 or 5 years. And I think what you're going to see is, I think with blockchain becoming a more recognized and real technology, I think you're going to start to see 6 or 7 really key protocols emerge that I think will be the blockchain 7. So they will be the block 7. So I'm owning this. I'm owning that.
Yeah,
that
you heard it here first.
But I think Mag 7 to block 7 is a really interesting story. And so I've talked a lot about helium. It's been a disastrous call. I've written an analogy of Siamese twins, which I've taken a bit of shit for. But the reality is that I think that helium, as a fastest growing mobile company in the US at the moment, almost twice as many daily users as Ethereum, yet it trades at a market cap of just over 500 million, and Ethereum is 5 billion. So I think what Helium are doing in the telecom world with real data, real mobile phones, real users, real consumption of broadband, that in all honesty is really fascinating when it comes to broadband, to blockchain, because unlike the Bitcoin companies and the Ethereum custody companies, which are custody companies, they're financial engineering companies, these are traditional businesses that are kind of sit as part of a parallel portfolio alongside their traditional stock market counterparts.
Now, this is Helium, the coin, not a stock.
This is Helium HNT, the token.
The token,
which you can buy on Revolut, you can buy it on CoinGecko, you can buy it wherever you want, yeah.
Right, we did discuss this, the top 40 most affected occupations by generative AI. So you've talked about the ones that won't be affected. Let's have a look at the ones that will. Now, how do we put this into a trade?
Well, you should just kick me out of the room now, because number 5, I'm screwed, aren't I?
So yeah, take us through the ones there that stick out that could be in actual companies that we trade.
I mean, maybe airlines become more optimized by technology. Telephone operators, ticket agents, travel clerks. I mean, I think these again, to me, are all telemarketers. This is all opportunities for me in the world of blockchain. So when I look at all this, I think that I just see not things that I necessarily want to short, because I think that stuff will take a long time. Why is OnlyFans going public? OnlyFans is going public because OnlyFans is core business with all the weirdness. And not that I know OnlyFans that well, but if you look at the data on OnlyFans and you look at what sells best on OnlyFans, it's a lot of very weird, strange stuff.
Right.
And I think the weird, strange stuff is going to be able to be replicated by AI significantly better than humans can do it. And so I would think that someone like an OnlyFans is trying to sell itself, before it gets disintermediated by AI.
Right. We've got one for you here that you started taking interest in last week. Crocs.
Crocs paid in 2023, I think, when money was basically free, or almost free. They paid $2.5 billion for Hey Dude. And I think, to be honest, it's a brand that they're choking on. And I think this is their biggest problem. And some people might say, looking at this shoe, there's no reason why they aren't. There's a very good reason why they are choking on it.
Or at best, they overpaid for it.
But I think they overpaid for it. And I think they've struggled to differentiate it. And I think they've struggled to roll it out. And it may well just be a case of sticking to what you're good at and not trying to be too diversified. So I have no prior knowledge and no proprietary information, but I would suspect that they're probably having a really good look at Hey Dude and saying, this is kind of like, a bit like, who was it? Kate Middleton had her Uncle Gary. Was it Uncle Gary? Who you never wanted to turn up at the family events.
Oh yeah.
I suspect that Hey Dude might be the cousin or the uncle that you don't really want at the family events. So it may well be you suddenly see Crocs only stores. Maybe Hey Dude gets spun out to a separate entity, but I would think there's a value unlock maybe to come at Crocs, and it should be on people's radar screens now, and it's certainly gone from being a cautious thing to me to being something positive. And the margins on core Crocs, they're almost like luxury margins.
Well, so Angeline, I know, wants to have a chat with you about Crocs as well as a couple of other things. So we're going to go to a very quick 1-minute break, and then you're going to get Angeline back quizzing Will.
Hey, trader friends, here we are. Will, really, really interested in all those names that you had to do with uranium and nuclear as well. I too have some exposure in that space, and I am in the Sprott uranium miners.
Okay.
In terms of a diversified play, because I don't want to, pick individual names. So I didn't want to spend time having to look at each individual one.
Yeah.
Views on an ETF, uranium miners? You like it or don't like that sort of position?
I think I think ETFs are fine. ETFs make money on the whole for the people who issue them. They're not the best way of generating alpha for investors. So I think I'd rather own the sort of picks and shovels to the gold rush than own the mines, because I think it's going to take a long time. I've been to a uranium mine in Namibia 2 years ago. Chinese owned uranium mine. They're highly complicated things, and so I'm not sure I need to. I mean, I own UEC, I own Cameco. It's more a case of when people come to this space, what are they going to come to? I think the smart, savvy, company-specific people will come to an ASPI, they'll come to a Lightbridge, they'll come to a BWXT, etc. And then for sure they might even come to a Sprott, an SRI, which is an interesting name, which ultimately puts together the whole sort of collectors for these things. But I don't have I think you can own. Pretty much you can own them all.
I'm neither smart nor clever, so I'm very simple. So my main premise, I'm hoping you're going to shoot holes in my theory.
What's your main premise?
So my main theory is that, as a race, as a human race, we're not really dealing with the real problem of climate change and energy. And ultimately, there is only one fix, right? And that is nuclear.
Well, I don't know that's true. I'm massively pro nuclear, but I think solar, solar arrays, batteries are absolutely also going to be, very, very significant. And I think it's going to take a long time to build the nuclear. And I think, there's going to be a lot of NIMBYism when it comes to nuclear, increasingly. And so I don't think it's a one-horse race. I think,
Oh, don't get me wrong, I think there'll still be a mix, but I think ultimately we'll wait so long to the point where the mix isn't going to solve the problem anymore, and then there is just one solution, and that is nuclear.
Well,
and just to give a baseline, right, for energy.
We may well be able to put solar on the moon and somehow beam it to Earth. I mean, I think there's, I think in the next 10 or 20 years there can just be some extraordinary technologies. But from an investment perspective, would I next door to take it as a technology that gets you across the chasm to the other side, okay, from fossil fuels to something possibly in the future that is clean and so far we think pretty safe, then I think nuclear is the bridge, is one of the key constituents of the bridge. And I think you've got to own the bridge, and you've just got to work out what's on that bridge.
Exactly. So the bridge, in my mind, is just, it gives that stable baseline energy, and then you can do what you like on the top, but it provides the baseline.
The question, I guess, for you is, where are you going to see the numbers support the stock market? Because we know what the stock market is like. The stock market needs positive news, it needs information, it needs to see trajectory. One of the reasons why the Mag 7 stocks are doing so well is because, to be honest, the numbers are still incredible and extraordinary. I think so. I wonder whether you're going to get that with uranium miners, because what happens is that as soon as mining companies start to dig holes, it becomes very expensive, and they don't dig holes with AI. I mean, AI may enable them to do stuff, but it's people and it's energy and it's costs and everything else. So I think that's where you've got to be a bit careful. I'm out of Cameco. I don't own Cameco, and I own UEC because I really like Amir, the CEO. I think he's a fantastic operator. So I think selectivity is key.
Interesting. Talking selectivity, I know that you want to talk about Crocs. Correct me if I'm wrong, I think Crocs was either banned or outlawed in schools in the United Kingdom because it caused too many accidents. But you're here to talk about the stock, I know, and you think perhaps just taking a look at the hourly chart, then going on to the daily, and then, it's had quite a fall from highs seen since July, but going back even further, let's see, this is the weekly view here, trader friends, weekly view, and then on to the monthly. So
this became a phenomenon phenomenon stock, right? You know, it's the kind of monster drinks of shoes. You know, I think Crocs sell 150 million pairs of shoes and Nike sell 800 million. So that gives you the kind of context. But you know, it's a very and you know, it's a very recognized brand. You know, it's very Marmite. People love it or they hate it. You know, they I know from my daughter who works there, they have these amazing, you know, they put little badges on your Crocs and you can personalize your Crocs. And I just ordered a whole bunch of Bitcoin Crocs and they're, you know, I mean, it's a bit of fun and they're not hugely expensive. And I believe anyone who works in the, you know, works in the NHS or whatever, you know, they wear Crocs because they find them incredibly comfortable.
Easy to get on and off.
Easy to get on and off. They're
Easy to
clean,
sanitize.
easy to sanitize.
That's it.
So I think there's a huge core market. I mean, I was looking at if you look at the numbers, so 4.5 billion market cap. They're buying back 10% of the shares a year. They've just guided for still really good operating margins. They're paying down 500 million of debt a year. So the valuation is pretty nuts, to be honest now. So I think if they were to take a write down in some shape or form, you're basically getting a 20% market cap being bought back and you're getting about a 16% EV to free cash flow yield. So it's not crazy, but you know, 5 times earnings. You know, I don't know. I think it's you know, I think it's probably something pretty interesting.
You sound like you think this is an opportunity that's is looking cheap now.
Well, I think most things are you know, cheap goes with the word nasty. So very often, you know, things that are cheap are nasty. I think this is maybe not quite cheap enough yet, but I think it's certainly you're beginning to get to a level whereby I would think that sort of value investors would start to have a look.
When would be a you know, cheap enough? Where would be a good entry level? Just looking at the shares, is the hourly chart here. Let's go.
I don't know. I think on a price basis, it's impossible to say. I would think probably when they start to talk about what they're going to do about Hey Dude.
Great.
Because Hey Dude is like, it's like, you know, being a swimmer trying to swim with a, you know, with a sea anchor attached to your ankle.
Hey, trader friends, welcome back. And we are 2 minutes and counting to the all sessions opening bell. For all of you that have been with us throughout this week, thank you so much for the amazing support as we are getting you that shiny new studio. Do hit the like and subscribe button if you enjoy this show, because that's what gets us the brand new studio. That's what gets us all this amazing budget for producer Phil to spend so he can get Rich and myself better kit as well. Just some of the heads up to some of the names that could move at the all sessions as we count down to that few more minutes to go. Affirm Holdings, we're seeing price target for Affirm Holdings. This is the buy now pay later company. Target price raised by JP Morgan to 91 from 84 there. Tempest, those of you that are trading invested in Tempest, BTIG raising the target price there to 85 from 75 as well. Also having some price target upgrades for Home Depot. Bath and Body Works, they're getting price target cut by TD Cowen. Home Depot, price target there raised by Jefferies to 474 from 460. So lots going on ahead of the all sessions. We also, one more, Home Depot, RBC, raising its target price there to 401 from 399 bucks. So 4 more seconds to the all sessions. And here we go, and checking in on the losers list first, because we are seeing risk off play out here, especially after last night. And we saw the Nvidias, the tech names coming off, and we're seeing SoundHound AI down more than 2% there. Palantir, those of you still holding on to that short position, you'll be pleased to know that that is down 1.8% there as we speak. Novo Nordisk down 1.4% there. A lot of talk on Discord about how there could be a pairs trade between Eli Lilly and Novo as well. Perhaps Eli's been having up sessions, too many up sessions, and there's this talk now that if Novo, for its GLP-1 drug, if we see that Novo does take the price of its products down, then maybe it could be a situation where Novo's share price in the longer term starts appreciating, starts rising. Right, having a look at United Health as well, that's down almost 8% there. Pelican, Mo, if you are watching, I know you've got a position on United Health, and Oracle as well, down 0.2% there. Switching over to the winners list, we've got Palantir Technologies. Well, hold on a second, move over. There we go. Winners list, we've got TerraWolf up 1.3%. Some of the miners, Alcoa up 1% there. And we also have Coinbase up 0.5%. Perhaps after all those moves with Bitcoin, Ethereum coming off end of last week. Those of you that were on that roller coaster with me, it was glad having you on the ride. We're also having, we talked a great deal about this with Luke early on, some of the early signs of the cycling back into the defensives and consumer names. Johnson & Johnson up slightly there, 0.3%. Some of the quantum computing stocks also higher. IonQ is charting a gain of 0.7% there. Now, just very quickly before we go, of course, we've got those minutes later on today, but we also have that countdown to Jackson Hole as well. For those of you that heard me talking about Green Lane Renewables, the latest on that is the fact that it has continued moving higher. I did have a trading view chart that was prepped for you, but it looks like it's now trying to ask me for a payment on TradingView. So I'll try and get that up for you on Discord and send that to Maturin for him to get it up. But we've had 3 strong days on Green Lane Renewables, the company that transforms all sorts of muck and cow poo, seriously, all that into a biomass. And it has had several huge spikes in volume in the last few sessions, and also big green candles are heading up. 2 ways of looking at this. One is take profits off the table. No one ever went bust by taking profits early. But also the other thing, Axel and I were talking about this as well and asked him for his opinion. Could also look for the plateauing of that price action higher. Could possibly give back some gains and then look out for a retest and perhaps a bearish signal. So on that note, happy hunting all of you out there and happy investing as well. Any questions, anything, send them through. And don't forget to slam the like and subscribe button. I'll be putting pictures of the fantastic build out by our amazing gallery crew behind the scenes on my Twitter page. So have a look at that if you want to know what we're doing behind the scenes at the studio as we build a new one in the coming week.